Welcome back, everybody. Ready for another deep dive? Today we're going to be tackling a pretty intense topic, the world of government regulation, traditional banking. Oh, and the rise of cryptocurrencies, of course. You guys sent in some really fascinating stuff for this one, press releases, articles, even a white paper for a crypto asset called Pulse Zen.
Yeah, it seems like there's a real clash of ideologies here, huh? Traditional finance going head to head with this new wave of decentralized systems.
Totally. We're diving into the Silvergate and Signature Bank shutdowns. Senator Warren's been making some moves. There's talk about the FDIC potentially going too far, and a whole lot of questions about what the government's really up to. Like, were these banks actually in trouble, or was there something else going on?
Well, let's start with Silvergate and Signature. Both were super involved in the crypto industry. Silvergate especially, it was like the main gateway for crypto businesses to get access to traditional banking services.
Right. And that seems to be where all the friction comes in. Some analysts, like Nick Carter, were even calling this whole thing a lab leak. Like the government's actions might have accidentally caused a crisis.
Interesting. Because neither bank was really on the brink of collapse when they got shut down.
Hmm.
Makes you wonder if there's more to the story than just, worries about solvency.
Hmm. You know, it's interesting. Some of the articles you sent in really lean into that theory. Like the government might be trying to put the brakes on the whole crypto industry, using these shutdowns as a warning. They even point to a history of like skepticism and even outright hostility towards crypto from some regulators.
That's definitely a perspective worth thinking about. And the Treasury, Federal Reserve, and FDIC all put out that joint statement, claiming they stepped in just to protect depositors and keep the financial system stable. But there's another piece of this puzzle that's raising some eyebrows.
You're talking about Senator Elizabeth Warren, right?
Yeah.
I was pretty surprised to read about her being involved in all this.
Yeah, it's definitely unusual. Reports are saying that she actively encouraged a bank run on Silvergate, which, by the way, could be illegal for us regular folks.
Wow, that's crazy. And then there's that whole thing with the FDIC and how they dealt with the assets from SVB and Signature. Some of the sources claim they purposely left crypto assets out of the bidding process.
That's a serious accusation, because the FDIC is legally obligated to get the best possible value for the insurance fund when a bank fails. If they left out crypto on purpose, it could mean their priorities were somewhere else entirely.
Exactly. It almost feels like they were more worried about sidelining the crypto industry than actually making sure the insurance fund got the best deal.
It makes you think, doesn't it? And then we have this key piece of the puzzle, that joint memo from the federal banking regulators. Back in January 2023, just a few months before everything hit the fan.
Okay, let's break down that memo. Seems like it could tell us a lot about what the government was thinking back then. So what did it actually say?
Well, the language was pretty strong. It straight up warned about the dangers of crypto-related deposits, highlighting things like frauds, scams, and how volatile the crypto market can be.
So are you saying that by focusing on the risks of crypto, the government might have unintentionally spooked people and actually caused the bank runs they were trying to prevent?
It's possible that memo, even if it was well-intentioned, might have made people lose confidence in any bank involved with crypto, and that lack of confidence can be a really dangerous thing in finance.
Makes sense. So if the traditional financial system's becoming less stable, more vulnerable to these disruptions, where do we go from here? Is there a better way?
That's where things get really interesting. One of the sources you sent, the white paper for Pulsen, outlines a totally different approach to finance, one built on decentralization and giving power to the community.
Okay, let's talk about Pulsen. As I understand it, it's a crypto asset, but it also seems to offer a whole new way of thinking about finance. What makes it so different?
For one thing, Pulsen runs on a decentralized network, meaning it's not controlled by any single entity, like a government or a big corporation.
So no one's calling the shots. How does that even work?
It uses a network of computers to validate and record transactions on this public ledger called a blockchain.
Hold on, a blockchain. That's the tech behind Bitcoin and other cryptocurrencies, right?
Exactly. And with Pulsen, this blockchain tech makes things transparent and permanent in a way that traditional finance just can't.
Interesting. No single point of failure, no one pulling strings behind the scenes. But what about security? How do you stop fraud? How do you make sure the whole system is safe to use?
That's a great question. Pulsen uses some really sophisticated cryptography, and it relies on the community to reach a consensus to keep the network secure. Every transaction is validated and permanently recorded on the blockchain, making it incredibly difficult, almost impossible, to mess with or change.
So it's like having a public record of every transaction
Yes.
that anyone can see and verify.
Exactly. And that transparency is what helps build trust and accountability in the system.
Ooh, okay, so that's pretty cool. Seems like this blockchain thing could really address some of the issues we've been talking about with the traditional financial system, I mean, especially when it comes to transparency and trust. But what about the other concerns? Crypto is known for being volatile. We've all seen how crazy those markets can get. How does Pulse Zen handle that?
You're right. Volatility is a big concern, especially for people who are new to crypto. But Pulse then has a couple of built-in things to kind of smooth that out. Encourage a more stable environment. Remember that burn function we talked about earlier?
Yeah, where some of the tokens are permanently removed, like
hmm
taken out of circulation with every transaction.
Exactly. And that gradual reduction in supply,
Hmm.
along with the PIF system, the one that rewards people who hold onto their tokens for a long time. All that helps to dampen those wild price swings, the ones we see all the time in the crypto market.
I see. So it's designed to create a more predictable ecosystem, more sustainable too.
Exactly. And that focus on stability, it's one of the things that sets Pulse Zen apart from a lot of other crypto assets out there.
Now, I know a lot of people are into crypto because of the potential for high returns. What kind of returns can someone realistically expect with Pulse Zen?
Well, it's impossible to predict the future, of course, but
Hmm.
Pulse Zen's design, how it works, and just the general growth of the decentralized finance sector as a whole, all of that suggests that the potential returns could be way higher than what traditional banks are offering these days.
Hmm. So higher returns, potentially more stability,
Yeah.
and less chance of the government meddling. That's a pretty attractive combination. But we have to talk about the risks too, right? No financial system is completely risk-free.
Absolutely. Transparency and community governance are fantastic, don't get me wrong, but you still need to be aware of the risks that come with crypto. Volatility, even with those efforts to smooth it out, is always going to be a factor. And then there's the potential for vulnerabilities in the smart contracts.
Vulnerabilities in the smart contracts. What does that even mean?
So imagine a computer program, one that automatically executes the terms of a contract. That's basically what a smart contract is in the crypto world. And while Pulse Zen's code has been audited by experts, checked for problems, no system is ever completely bug-free, totally immune to exploits.
Gotcha. So it's like with any new tech, there's always a learning curve and a certain level of risk involved.
That's why it's so important to do your research, understand the technology, how it all works, and approach any investment carefully.
Good advice. I want to go back to that banking crisis for a second. We saw how government actions, maybe driven by a negative view of crypto, might have made the traditional banking system less stable. So how does all this affect the future of decentralized finance, especially projects like PulseZen?
That's a really interesting question. I think this banking crisis has really shown a light on the weaknesses of centralized systems, exposed them. It's shown us the potential for the government to overreach, the lack of transparency in traditional finance, and the risks of putting all our trust in a handful of powerful institutions to control the world's money.
Yeah, that's a good point. And it feels like those concerns are pushing more and more people towards decentralized options. Like PulseZen, it's almost like the government's actions, even if they didn't mean to, might actually be speeding up the adoption of decentralized finance.
It is kind of a paradox, isn't it? By trying to control and regulate this new technology, they might be accidentally helping it grow.
Wow, that's a fascinating point. So what does all this mean for the average person? How can they navigate this new financial landscape?
Hmm?
Make smart decisions about their financial future.
The biggest takeaway, diversify. Don't put all your eggs in one basket, whether that's a traditional bank account or a single crypto asset. Explore different options. Do your research. Understand the risks that come with each one. Knowledge is power, especially when it comes to your money.
For sure. I also think it's important to challenge the status quo. The world of finance is changing so fast, and the old rules might not apply anymore. Be curious, ask questions, be open to new possibilities.
I agree wholeheartedly. What's great about decentralized finance is that it gives individuals more control over their own financial future. It offers transparency and autonomy, things you just don't get in the traditional system.
But with freedom comes responsibility, right?
Yeah.
It's crucial to educate yourself.
Yeah.
Stay up to date on what's happening in the crypto world and make decisions that fit your own risk tolerance and your financial goals.
Absolutely. This is about taking charge of your financial future and actively shaping the world you want to live in.
That's a powerful message. We've covered a lot in this deep dive. PulseSem, the banking crisis, the implications for the whole financial system. But I have a feeling we've only just scratched the surface. This field is so fascinating and it's changing so quickly. So any final thoughts for our listener? What should they take away from this conversation?
Yeah, it really does feel like we're at a crossroads. We've talked about the potential problems with government involvement in traditional banking, and then this rise of decentralized finance as a possible alternative. So, for our listener trying to figure this all out, what does it all mean for them? I think it comes down to realizing that finance is always changing. Like what we think is normal today could be totally different tomorrow. The key is to stay informed, be adaptable, and never stop learning, really.
So let's say someone's listening and thinking, okay, this decentralized finance thing sounds interesting, but where do I even start? What advice would you give them?
I'd say start by looking into different decentralized finance projects. Don't just jump into the first one you hear about. Read those white papers, understand what they're trying to do, look into the teams behind them. It's like researching any investment. Due diligence is key.
Right, and don't forget about the community aspect. There are tons of online forums, social media groups, even in-person meetups all about decentralized finance. Getting involved in those communities can be a great way to learn from others. Share your own insights, get different perspectives.
Absolutely. And don't be afraid to ask questions. The decentralized finance space is full of people who are really passionate about it, eager to share what they know and help out newcomers. It's a pretty welcoming and supportive community overall.
That's awesome to hear. It sounds like decentralized finance isn't just about the technology, it's about a change in how we think, a move towards more individual empowerment, and collaboration as a community.
Exactly. It's realizing we don't have to rely on those old systems, the
Yeah.
centralized authorities. We have the tools, the technology to create a financial system that's more equitable, more transparent, and way more resilient.
Well, this deep dive has been a real eye-opener for me. We've uncovered some pretty concerning things about the traditional financial system and explored how decentralized finance could offer a better path forward. So, as we wrap up, what's the one thing you really hope our listener takes away from this conversation?
I hope they leave feeling curious, with a desire to learn more. We've only scratched the surface of what's possible with decentralized finance. The future of finance is being shaped right now, and everyone has a chance to be a part of it.
That's a great note to end on. Thanks for joining us on this deep dive. To our listener, keep asking those questions, keep learning, and keep pushing the boundaries of what's possible in the world of finance. Until next time.